Today on Forbes, why Capital One's $5 billion acquisition of fintech Brex could be another masterstroke for billionaire Richard Fairbank. Amid the flurry of news over the last week surrounding President Trump's speech at the World Economic Forum in Davos, Switzerland, and also the tragic events over the weekend in Minneapolis, an announcement by the nation's third-largest credit card issuer, the $661 billion in assets Capital One, that it was spending $5.2 billion on a fintech named Brex, seemed to garner little attention. However, Capital One's billionaire CEO and co-founder Richard Fairbank is renowned as one of banking's smartest strategists, and this latest acquisition, which is priced well below Brex's $12 billion valuation from 2022, could prove to be a game-changer in two different areas. Founded in 2017, Brex offers corporate credit cards, employee spend management tools, and business bank accounts to 35,000 customers, many of them technology firms like Coinbase and DoorDash, as well as startups that often were rejected by American Express. The acquisition, made half in cash and half in stock, gives Capital One a giant inroad into technology companies, from which it can expand its credit card balances. Though not yet profitable, Brex is growing like gangbusters and has reported a gross revenue run rate of $700 million per year. On the company's fourth quarter earnings call last week, Fairbank said Brex will help the credit card giant expand further into business payments and small business banking. He noted the payment challenges facing businesses, including collecting invoices, deciding how to pay, managing approvals, and tracking worker spending. He said, quote, "In 2017, Brex invented the integrated combination of business credit cards, spend management software, and banking together in a single platform." He added that, as businesses move away from cash and checks, the business card market is growing at 9% annually. Fairbank said about half of the $2 trillion in annual business card spend is, quote, corporate liability, where the business entity is responsible for making payments on the card, instead of the business owner being responsible. Fairbank said Capital One doesn't have as much traction in corporate liability and thinks Brex will help fill that gap. He called out some of Brex's large tech customers, including Anthropic, Cloudflare, Robinhood, Scale AI, TikTok, and Toast. Another market Brex will help Capital One expand into is small business banking. Historically, Fairbank said, Capital One's small business offerings have been, quote, mostly a local offering in our branch footprint, based on banks that cover 18% of the US. Digital-first business banks have become a hot area of fintech. Beyond Brex, companies like Ramp, Mercury, and Relay continue to grow quickly. Fairbank said Capital One previously, quote, didn't have enough scale in our small business customer set to invest heavily into new technology to support small business banking, but the Brex purchase brings better technology. Sanjay Sakrani, a research analyst at KBW, said Wall Street has long admired American Express's position in having a card processing network and large businesses in personal and corporate cards. He says, quote, this deal, combined with the Discover acquisition, gives them most of the pieces they need to replicate a very similar model. Sakrani thinks they can now become, quote, more of a vertically integrated operating system to small and medium-sized businesses and commercial clients. The other potential game changer from the Brex acquisition could come from its underlying technology. Few veteran bank CEOs are as attuned to tech infrastructure as Fairbank, and he stressed Brex's expertise on the earnings call. He said, quote, how many times do I talk about building a tech stack from the bottom of the tech stack up? That is what we've done at Capital One. It is a very long and lonely journey to do it, but the benefits are multiplicative. And without specifying details, he said Brex's technology won't just help his card's business, quote, but also all aspects of the business side of Capital One. Sakrani adds that Brex's technology is, quote, very AI forward and, quote, will enable Capital One to compete effectively with other fintechs. Of course, Capital One plans to use its vast resources to try to accelerate Brex's growth, including its massive marketing machine and targeting capabilities, data scale, big customer base, and large balance sheet. For full coverage, check out Jeff Coughlin's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.